In the ever-evolving landscape of financial markets, the intricate dance between inflation and asset prices has long been a subject of keen interest. Bitcoin, the pioneering cryptocurrency, has often thrived in times of inflationary pressure. However, the prevailing circumstances, characterized by a resurgent inflation wave and a more restrictive monetary policy, have led to a sense of uncertainty surrounding the impact of inflation on Bitcoin's price. As we delve into the potential implications of the upcoming Consumer Price Index (CPI) report on the cryptocurrency market, it becomes evident that Bitcoin's price trajectory may take an intriguing turn. The current financial landscape — equities, gold, and US Treasuries compete for investors' attention. The financial markets are currently a stage for a captivating performance, with equities, gold, and US Treasuries vying for investors' attention. The S&P 500 index's proximity to its all-time high, reached in January 2022, would traditionally signal a bullish environment for risk on assets, including commodities and cryptocurrencies. However, a unique divergence from the norm is observable this time around. A paradigm shift — stock market as a hedge against inflation surge. In a surprising twist, the stock market has taken on the role of a hedge against the onslaught of inflation. The persistent inflationary pressures, spanning from April 2021 to May 2023 and hovering above 4%, have spurred investors to seek refuge in equities. This unexpected shift in market behavior underscores the apprehension surrounding the current inflationary trajectory. Inflation's historical nexus with Bitcoin — a cause for optimism. Historically, inflation has often played the role of a catalyst, propelling Bitcoin's price to soaring heights. Notable instances, such as the remarkable ascent to $65,000 and $69,000 during periods of monetary expansion and heightened inflation in 2021, serve as compelling examples of the positive correlation between Bitcoin price and inflation. This phenomenon has instilled a sense of optimism among cryptocurrency enthusiasts, fostering a belief in Bitcoin's resilience as an inflation hedge. The unprecedented conundrum — inflation amidst reduced liquidity. Yet, the present conundrum takes shape against an unprecedented backdrop. Inflation's resurgence coincides with deliberate efforts by the Federal Reserve to diminish liquidity within the financial system. The intricate interplay between these two contrasting forces introduces an element of unpredictability, casting a shadow of doubt over the conventional relationship between Bitcoin price and inflation. The CPI report — a potential game-changer. Amidst this intriguing landscape, all eyes are on the upcoming CPI report. The Consumer Price Index is poised to provide crucial insights into the trajectory of inflation, potentially heralding a significant shift in market sentiment. A higher-than-expected CPI reading could reignite fears of sustained inflation, prompting investors to re-evaluate their strategies and asset allocations. Bitcoin's crossroads — navigating inflation's uncertain impact. As the cryptocurrency market braces for the CPI report's unveiling, Bitcoin finds itself at a pivotal juncture. The prevailing uncertainty surrounding the impact of inflation amidst tightening monetary policy has injected an element of caution into the minds of investors. The juxtaposition of inflation as a historically favorable factor for Bitcoin's price and the current enigmatic scenario calls for a nuanced evaluation of potential outcomes. Inflation-driven surge. In the event that the CPI report signals a continued inflationary surge, Bitcoin could potentially experience a resurgence in demand. The cryptocurrency's perceived attributes as a hedge against inflation could be rekindled, reigniting buying interest from both institutional and retail investors seeking to safeguard their wealth from the erosive effects of inflation. Inflation-resistant Bitcoin? Conversely, the prevailing uncertainty could prompt a scenario where Bitcoin's resistance to inflation is put to the test. The Federal Reserve's efforts to curtail liquidity, combined with heightened inflation, might challenge Bitcoin's historical role as a reliable hedge. Investors, driven by the allure of traditional safe havens like gold and US Treasuries, could shy away from the cryptocurrency market, seeking refuge elsewhere. The Federal Reserve's tightening grip — navigating monetary policy. In the realm of financial markets, the actions of central banks wield significant influence. The Federal Reserve's deliberate reduction of liquidity, as evidenced by its gradual tapering of asset purchases, adds a layer of complexity to the inflation-Bitcoin relationship. The conventional wisdom that inflationary pressures would invariably drive investors towards inflation-resistant assets like Bitcoin is now challenged by the simultaneous tightening of the monetary reins. A delicate balancing act. Inflation and monetary tightening. The Federal Reserve's tightening of monetary policy, designed to curb inflation, introduces a nuanced dynamic into the equation. While inflation has historically fueled Bitcoin's price surges, the potential dampening effect of reduced liquidity cannot be overlooked. This intricate balancing act between inflationary forces and tightening monetary policy creates a scenario where Bitcoin's response becomes a confluence of multiple variables. The Fed's influence takes center stage. Should the Federal Reserve's efforts to rein in inflation prove successful, Bitcoin may find itself navigating uncharted waters. The cryptocurrency's past performance as an inflation hedge might be challenged, as investors gauge the effectiveness of the central bank's measures. In this scenario, traditional assets like equities and gold could once again become favored safe havens, diverting attention and capital away from the cryptocurrency market. Inflation persistence and Bitcoin's ascent. Conversely, should inflation persist despite the Federal Reserve's endeavors, Bitcoin's allure as a hedge against economic turmoil could be revitalized. The cryptocurrency's decentralized nature and limited supply could position it as an attractive option for investors seeking shelter from the storm of inflation. Bitcoin's historical precedent of thriving in times of economic uncertainty might once again come to the fore, amplifying its appeal. Regulatory wins. A potential game-changer. Amidst the interplay of inflation and monetary policy, regulatory developments cast an additional shadow of uncertainty over the cryptocurrency landscape. Governments around the world are grappling with the regulatory framework for cryptocurrencies, and any significant shifts in regulations could send shockwaves through the market. The delicate task of striking a balance between innovation and oversight could influence how Bitcoin responds to the multifaceted challenges it currently faces. A broader market perspective. Cryptocurrencies in the inflation context. While Bitcoin often takes center stage, it's important to note that it's not the only cryptocurrency influenced by inflation dynamics. Altcoins, with their unique value propositions and use cases, also experience ripple effects from inflationary pressures. The diverse cryptocurrency ecosystem adds layers of complexity to the relationship between inflation and digital assets, making the market's response to inflation even more intricate. Conclusion. An unpredictable trajectory. As we stand on the precipice of the upcoming CPI report, the cryptocurrency market is poised for a potential inflection point. The convergence of inflationary pressures, monetary policy shifts, and regulatory uncertainties forms a complex tapestry that will shape Bitcoin's journey in ways both expected and unforeseen. The dichotomy between historical correlations and the evolving market landscape underscores the unpredictability of Bitcoin's response to the current inflation resurgence. While Bitcoin's past resilience in the face of inflation remains a beacon of hope for enthusiasts, the present circumstances necessitate a cautious approach. The forthcoming CPI report holds the promise of shedding light on the intricate dynamics at play, but its revelations may only mark the beginning of a new chapter in Bitcoin's relationship with inflation and the broader financial markets. As investors, analysts, and enthusiasts prepare to dissect the implications of the CPI report, one thing remains certain. The journey ahead for Bitcoin and its interaction with inflation will be nothing short of fascinating. With each passing development, the cryptocurrency market continues to redefine its role, leaving observers to wonder how Bitcoin's price will ultimately react to the multifaceted challenges it confronts in this ever-evolving financial landscape.